A very good afternoon. You're watching the newsroom right here on ET Now. I am Ajay Sharma. The markets are staging a very sharp recovery. In fact, almost 1% on the benchmarks, both the Nifty, Sensex, Bank Nifty. In fact, 400 points now almost on the Bank Nifty. So the mild dip which came through in the first 2 hours of the session was bought into. Shiv Sehgal is joining me to talk more about markets, the fundamentals and the factors which are at play from Edelweiss. Shiv, afternoon. Thanks for joining in. I was looking at the notes which you had shared with my team. One of the important things which caught my attention was the credit growth data. We are almost nudging the 15% mark on the credit growth, and Bank Nifty actually it is, which is providing leadership to the market. What are your thoughts on financials? Which part of the financials are you bullish on, and what can we read from the credit growth data about the market and the economy at large?
Sure. Thanks, Ajay. Firstly, thanks for having me back for a chat. Just before I answer your question, I think it's important for viewers to understand where we are in the world. But along with that, it's been a rapid return of inflation as well. This relies in sharp contrast to the last decade. Last decade was about global demand being sluggish, commodities were struggling, inflation was perennially undershooting targets of major central banks. And we had a sustained period of low interest rates and widespread QE policies, right? Now, consider this, as we stand today, in terms of the inflation narrative, in 2002, it took 5 years for the US CPI index to rise to 15%. In the 2009 inflation narrative, it took 8 years to reach the 15% target inflation in the US. And it's been barely 2 years, we have seen the same kind of rise in US. And that's kind of caused a lot of concern in terms of the inflation narrative that we have seen. We've seen the largest and the fastest expansion in both fiscal and monetary policies. And this was all globally synchronized, clubbed with a decisive shift in global demand towards good. I mean, of course, during COVID, this fired up global demand for commodities as well. And at the same time, COVID lockdown disrupted the global supply chains. So all this fueled a global commodity prices and inflation, created expansions of a super cycle in global commodities. But fast forward, since the beginning of this year in 2022, we have seen, not only the Fed, but every central bank increasing rates, and that's had, ripple effects across the world. What we are now witnessing is the fastest and most broad-based synchronized monetary tightening. To give you an anecdote, nearly 50% of central banks have raised by almost 100 bips in the last 3 months alone. And that's not been seen, at least in this century. So since 2000, we have not seen that. As a result of which, of course, we are seeing a sharp synchronized global tightening is now leading to economic activity having an impact. The beauty of that is we are not seeing that much in the Indian context. But if you look at Europe, if you look at US, you look at Japan, there are every pocket. I mean, Russia and Ukraine have their own issues. And that is leading to a downturn in some of the major sectors. So, for example, if you look at what's happening in the US and China housing market, they're moving down very sharply. Right. So fast forward, the Feds and the central bankers resolved to fight inflation, slowing global money supply and accelerating global downturn, all point, in my mind, towards a further downturn in global commodity prices. Right. As a result of which, I think the inflationary pressures are definitely going to cool down in the next quarters. So far it's been more pronounced in, we're already seeing a sharp downturn in metals in the last, 4-5 weeks, followed by agriculture as well. And late, even oil prices, have definitely come down from their peak. I think this trend would only accelerate. Now, zooming out and looking at, in terms of, people have asked me what situations are in terms of the power demand happening in Europe, how much of a basket case is an issue there. I just want to highlight that the reality is, the news flow and the sensationalization of certain negative events is always, brought to the front lines. But if you look at the underlying, the parabolic surge in electricity costs have been broken down. There has been gas storage facilities are at their target levels in Europe as well. And not many are people talking about in India, but there has been a softer element there as well. What's happened is the softer demand in China has caused that country to provide their surplus LNG to the European region as well. Also, I think another important aspect from a global recovery is that China is now injecting more stimulus into its economy than it did back in almost 2020, when COVID first arrived. Also, I think their more stringent and zero tolerance narratives is also about to change, and that will also open up supply chains. I don't think the government in China is very unlikely to reimpose the type of multi-week, multi-month wholesale shutdowns, right? So the point here being, I think, the global snippets are improving as well. But despite all that, coming to your question in terms of credit growth, yes, absolutely. India's credit cycle seems to be perking up, right? Bank credit growth has perked up from mid-teens to now almost remaining stuck within that, 7 to 8% over the last 2 years. We are, significantly seeing that. And if you look at the history of the Indian credit cycle, I looked at a lot of data. Kapil, our economist, has done a superb note on that as well. There have been three main periods. There was 2003, 2010, and 2018. Notably, while the 2003 cycle was a sustained one, which lasted several years, the other two didn't actually see beyond a few quarters. And our view is that, this is a very important inflection point that we're seeing in the Indian economy. That coupled with the fact that, the way the global markets are looking, the global asset allocators are looking at India today is a very, very different narrative to what we have seen, at least in this century, right? We've all been talking about, the China plus one, the manufacturing, corporate tax rates lower. I think the fact that the data is showing it to you in the last 2 years, China's MSCI emerging market weight has gone down by 900 basis points, which is 9%. On the flip side, India's weightage in the MSCI emerging market world has gone up by 6 percentage points, right? So we used to be 8.1%, we are now 14%. The reality is that the global investing community is looking at India at a very different pair of eyes, right? We had, yes, you've spoken about this in your show as well. Foreigners were selling, $33 billion from October till about June. That is, the trend has changed. Foreigners are now pumping in money back again. And I think going into this seasonality of Diwali, Christmas, financial year end, I think you're going to see a very structural bull market in India. And coming to your point, I think in the financial side, private banks, in a relative valuation sense, still look very attractive to us. And, we are extremely bullish on the financial services sector in India.
Right. Shiv, I get your point. I was just looking at the data. India has, gained 2-3% year till date, whereas the Western indices are down 14-15%. Massive outperformance coming in. And now there is a sense emerging that India may emerge as a, individual asset class in its own right because of superior quality of earnings and superior macros, which briefly you spoke about. When you speak to institutional guys, are you getting a sense, are they buying this argument?
Absolutely. So Ajay, to give you some anecdote, right? Over the last 2 months, a big theme that is coming out from the largest global asset allocators is that they are all looking to launch EM ex-China funds, right? There have been almost 7 to 8 mandates that have emerged like that in the last 2 months. And the way that the institutional world works is they come up with a product, it goes out to marketing, people put money into that product. And what we see is that over a course of 3 to 4 months, the deployment of that product will start happening in the Indian markets. So my view is, whereas for every $100 that was raised, India was seeing an allocation of $8 to $16, depending on, what the portfolio manager's view was, whether they wanted to be equal weight, overweight India. But that allocation is going to go out significantly higher, right? For every $100 raised, India is going to see a much larger proportion versus the rest of the emerging market peers. And as you said, I think, we are at an inflection point. India has done, from a I think policy perspective, from, the fact that, yes, China did a self-goal and, the angst against China in terms of, and the angst against Russia, in terms of global asset allocators is going to be a big beneficiary to India. Even within India, right? Even let's assume that there is a significant downturn, even from here, and rates continue to rise in the West. I think, we are extremely bullish on certain other sectors in India as well. I think, the domestic auto scene is going to be, there has been a lot of resilience owing to pent up demand. Also, falling steel prices could result as a significant uptick on the margins front there as well. We remain very bullish on the FMCG sector in India. If we all recall, last decade was a stellar run. Last 2 years have not been that favorable. I think with the fall in commodity prices that we are talking about, that sector will come back in vogue again. We talked about private banks already. I think insurance is another sector, which has had very low valuations relative to history. So overall, I think, the bottom line remains that our view going into the second half of this financial year in India, I think the emerging market performance of India versus the rest of the EMs will continue. And the dollar is, the INR versus the dollar is already indicating that. Indian rupee has continued to outperform most of EM currencies. We can look at, just our regional diaspora as to what's happening in Sri Lanka, Pakistan, even, Southeast Asia. And I mean, from every anecdotal statistical point, I remain extremely bullish on how things are going to play out for India from here, at least for the next few quarters.
Right. Shiv, so on the base of that data which you shared and the argument which you're putting forth, do you see that the last 10-month old correction may now be coming to an end, and at least led by earnings growth, we may be in for a next 3-4 year kind of a sustained growth in expansion of equities, not only the benchmark indices, but overall buoyant environment in the markets?
So, Ajay, great question. I think, as I said, India is definitely going to be an outperformer, both in terms